It's a good afternoon for the bulls, 106 points on the Nifty and counting. And now we're going to focus on Godrej Consumer specifically. Stock is up almost 3.5%. That is today, and then it's had an interesting journey. We'll pull up the 1 year for you as well. It's been a rather noisy up move, not a very straight, linear sort of line up. But nevertheless, it is pretty close to its 52-week highs. The company's come out with the first quarter update. Let's go across to Mangalam to understand what it is saying about its performance. Mangalam.
Well, just 20 rupees away from its all-time high for Godrej Consumer, and this stock up move has been, a one-way street ever since Sudhir Sitapathi's leadership was announced. And it looks like, the company perhaps is not singing one wrong note as far as the updates are concerned as well. High teens sales growth expected in India, led by strong double-digit volume growth and some price action that the company has taken. And obviously it was on a favorable base because the same time last year the volumes grew by just around 3% odd. But the important part is that the 2-year CAGR is likely to be in double digits. So compared it to pre-COVID levels, the compounding should be in double digits. So back calculation suggests that the volume growth this time around could be anywhere between 15 to 17 odd% itself. Household insecticides and personal care is what has done well. Double-digit growth is what this company is talking about in these two verticals, and that's about just one half of the business. The other half of the business, in that there is the Indonesian verticals and all the other international geographies. Indonesia likely to be flat quarter on quarter, year on year on a constant currency basis. So that is something that we need to witness some growth out there coming in. But the other ancillary geographies, say Africa, Middle East, SAARC countries, all of them are seeing growth anywhere between 20 to 50 odd%. Of course, a lot of that comes on a favorable base as well. But then again, it is a good update coming in from Godrej Consumer. And of course, the big trigger for them will come by in October when Sudhir Sitapathi actually takes over.
Okay, Mangalam, thanks a lot for that. Now, Deepak, Godrej Consumer went through a period of rank underperformance and valuation-wise, it was always considered, cheaper compared to relatively its peers. Now with management change and, some of these numbers, do you think it can re-rate from here as well?
No, it's interesting, Anuj. In fact, my family's owned this for ages, and I think the last high again was made in 2018, after which it was on a decline quite significantly. Until recently, we've seen some news and driven it up. But then, for a company like Godrej Consumer, although volume growth at 12-13% sounds good, these are companies valued at a very, very rich level. So you would actually need to grow above 20% at some point, or have visibility of that to be able to justify this. However, all of the FMCG spaces like that, in that case, in many of those other companies like Hindustan Unilever or anything like that, we're talking of low double-digit or perhaps high single-digit growth, and they are valued even richer than that. So I would say if you're making a bet in the FMCG space, Godrej would be a useful player to have. But I think I would look at some of the smaller players. We're seeing a lot of growth in stock prices everywhere, whether it's Marico or Godrej or a bunch of players here. But I would, I'm a little wary because valuations are very rich, and if you wanted, you would actually take a sectoral play by all of the players or a number of the large players, rather than focus only on the Godrej or a Marico. I take a wider bet here. But I'm not very enthusiastic about the FMCG sector in the next 1 to 2 years. I think there's many more interesting opportunities on the table.
Okay. By the way, today a lot of the reopen or unlock trades are working really well, specifically travel and holiday. Look at Wonderla. They've anyway restarted, at least partially restarted their park. I think it's just off Bengaluru, where Deepak is from. Then there's Easy Trip, which is doing very well, 10% on Easy Trip, by the way. And even Mahindra Holidays is having a great run. So that's the nature of today's market. Would you look at any of these, or is this just, some fun trading that's going on, Deepak? Basically, any ideas on the reopening trade?
Well, to be fair, on a personal level, I'm waiting for the reopen trade. We're going to do a lot more traveling than we have been in the last, few weeks or few months. But, and we own, some of those stocks like Indian Hotels. I think that all of the stocks should see some revival in the business going forward. Some of them have picked up a lot of debt, Wonderla itself is, it's relatively a small stock, only about 3 or 4 parks. So you're actually 3 active parks right now. So and one of its parks is in Kerala. So I don't think they're going to, because Kerala is still seeing a fairly large number of cases. I don't think the recovery is fully in place for it yet. It'll still take a little bit more time. Having said that, I think this is an interesting play to have. There is a lot of demand, and some of the demand will over a period of time, come back into the market, probably 6 to 9 months. But I think the longer term, the longer term nature of this is going to be that most of this is going to be concentrated in the next 9 to 12 months. And only after that are we going to see perhaps moves beyond domestic shores. So people traveling abroad for vacationing. Till that time, I think the domestic players will benefit the most. Then the non-domestic will start coming in slower, in a bigger way. And the way to proxy that is to see credit card spends. When credit card spends start increasing dramatically, I think that's when we'll know that travel has actually made up a considerable portion of its losses. So we're looking forward to this. We do have some investments. I think it's a very good place, and you would want to take parts of them from the hotel and the people who manufacture, in this case, the rooms and all that stuff, and also the players who help in the transaction. Easy Trip is one. There's a bunch of other players as well. But you'd probably want to take piecemeal approach to this and wait for the recovery to show up in the numbers. Right now, there's very little to talk about. It's a lot of expectancy. But in general, I would say wait. Let the numbers show up a little more.
Okay, Deepak, we'll leave it there today. Thanks a lot for joining us. Good talking to you and, talking about so many stocks. Let's move on then and invite our next guest. We have Mithun Ashwath joining us, Managing Partner at Kiva Advisors. Mithun, hi, good afternoon. Thanks for joining us. So what's the market call now? It's been a steady run for the Nifty and even bigger run for the broader market.
Good afternoon, Neeraj. Anuj, sorry. I think, markets have been consolidating at these higher levels right now. I think, valuations obviously are already discounting 22. The market expects earnings to grow quite significantly in FY22. If you look at the street, I think there's about a 30% plus sort of earnings expectation in FY22. The hope here is, can these earnings be even better than the 30-35% what the street expects? If you look at spaces like auto, where they thought a complete deceleration could happen because of the lockdown, the numbers in June are quite encouraging for the companies which have released their auto sales numbers. So we need to see if this, percolates to better growth in the next few quarters. And if it was, and the earnings are better than what the street is expecting, I think then we can trade higher, at least at the index level.
Okay, so it's all about earnings. Mithun, good afternoon. I take your point. So let me ask you this, just purely from an earnings play point of view, where do you think the pleasant surprises perhaps might be at the end of the first 2 quarters of this year? Which would be your top sectors from that standpoint?
Surabhi, I think, we've got positions in, tech and pharma where, earnings expectation is well known. And that's why the valuations are very high. According to us, where value is still there and where maybe there is expectation or earnings surprise potential is maybe in the financials and the auto side. Financials, obviously, because of the second lockdown, there is talk of potentially NPAs being higher than what people estimated maybe a quarter ago. However, most of these institutions, at least the larger ones, are well capitalized. And with the increased vaccination, and we do think, almost 30% of India has now got 1 dose. And there are pockets, cities like Bangalore, maybe at around 40 to 50% of the adult population having their first dose. So if cases do recede, we do see the banks coming back in a big way. And that could drive the Nifty higher. The auto is another sector where we do think on 2 counts, domestic demand coming back, and number 2, exports being a big driver as well for the auto components companies, as developed markets, be the US or Europe, are seeing good demand. So those are two spaces where we think the upsides could be relatively higher because they've underperformed in the last 1 year.
Okay. So, in financials, and we were just discussing this with the previous speaker as well, the thing is that, is there anything to pick beyond the top lenders? Because that's a bit of a no-brainer. I mean, you can buy an HDFC Bank, an ICICI Bank, an SBI, and you're done. But the issue is that beneath the surface, are you finding some interesting trades or even investments in the tier 2 NBFCs and banks? And if so, what would the go-to and the no-go areas be?
Honestly, we don't have too much of coverage, or we try to stay away from the public sector banks and the tier 2 banks. However, there are pockets of value that we are seeing even in some of these public sector banks as well, where numbers have come back and valuations are quite low. But this needs to be done on a very selective basis. But some of these where the CASA levels are very high and the pre-provisioning profits are actually sometimes maybe just the market cap is 2-3 times the pre-provisioning profits. Those may present tactical opportunities over the next 1 year. So there's definitely value in some of these public sector banks.
Okay, got that. By the way, I just want to point out that Cafe Coffee Day, the stock that we've sort of really stopped speaking about for obvious reasons, that's making an interesting move today. There's some buying it's obviously become a circuit-to-circuit stock, but it's sort of on an up circuit today, and it's pretty interesting. You've got volumes of about 28 lakh shares thereabouts. So that's one more stock on the small cap arena that's kind of flying around. So the reopen plays, the urban plays, whether it's hospitality, travel, we've got stocks like Easy Trip, Wonderla, all of them up and about. But do they make the cut for you, Mithun? And would you look at any of these urban plays?
We do like this reopen theme. We have taken positions earlier into companies which are basically operators, travel operators. One position that we had historically and continue to be quite positive on is a Thomas Cook. We do think that can be a big beneficiary of opening up. It is going to take time, like your previous speaker spoke. International travel is not going to open up in a hurry, but we do think with the whole vaccine passport happening, at least in Europe from July 1st, we think this could percolate to India as well. Already in the EU, I think about 7 countries have given their go-ahead for the Covishield vaccine. So, some of this outbound travel is likely to happen. Hopefully, it could happen maybe in the next 2 to 3 quarters. But I think the market will price that in, and some of these stocks will, move up in anticipation of that. Because we've seen in the US where travel has opened up completely, there's been a mad rush to go on holiday, and we don't see something different happening in India. It's going to happen the same thing. I think people will be left to only domestic travel initially, but once the skies open, I think Indians will travel in abundance abroad as well.
Oh yeah, I see airports and toll plazas absolutely jammed the moment we know we can get out and it's safe enough to do so. Absolutely, Mithun. Okay, now that's a lot on the consumer preference side. I want to move to also the industrial and the economy side of the market, because that's where we've seen some very steady buying as well. Sectors like power, capital goods, construction. What's your sense on this lot, and what would you buy here, if anything at all?
To be honest with you, Surabhi, we've stayed away from construction or EPC companies. We really don't see that they really generate enough value for shareholders over a long period of time, because they are, they're capital-intensive businesses. They need a lot of working capital, so they don't really generate cash flows consistently over a period of time. So we've stayed away. Having said that, we like to play construction, real estate, via proxy plays. either tile manufacturers, sanitary ware manufacturers, or the paint companies, or even cement, for instance. I think that's a much more durable way to play the whole construction real estate space.
Okay, got that. Mithun, good chatting with you today. Thanks very much for joining in. You stay safe, and we look forward to the next conversation. Okay, on that note, let's just come back and see what the market's doing. It's holding steady, absolutely steady, 15,820, 25 thereabouts on the Nifty. Bank Nifty again, a gain of over 1%. And mid-caps are not that bad. I mean, beneath the surface, smaller companies, you've got something like a KRBL, MTAR, Shelby. It's a lot of stock picking is still going on. So, let me toss this back to Anuj. Anuj, how would you sort of describe the texture of the market given what we're seeing on the screen today?
Surabhi, the larger texture of the market was still up even last week, and we had discussed that within that the market was just having some kind of nervousness around the 15,850, 15,900 mark. For 2 days now, you're closing at the high point of the day. I think the one caveat for this market remains the FI data. I mean, today, you want to see whether there's been some buying or at least the selling has come down or not. Of course, in the past, it's not mattered, but even then, you want to see if it's being bought by institutions or not. I think that's going to be important. Also, if you're a bull, you'll be enthused by today's mid-cap action, especially in the second half. Because in the first half, the mid-cap index was underperforming. And in the second half, that seems to have picked up. In fact, it's almost now getting at par with the Nifty. So I think that's also another interesting indicator that we have. And advanced decline has been very stable today. I think this is the best advanced decline, 2.5:1 thereabout. It's not one of those 5:1, 6:1, which makes market unhealthy. At the same time, not a market which looks narrow. It's a perfect ratio that you have right now.
Okay, well, that's the market that we have. We'll take a quick break on that note. We'll come back with lots more on the other side, including post-trading calls for the last half hour and all the buzz from dealing rooms as well. Stay tuned for that.